Okay, definitely going to record going through the NTAP setups here. And let's collectively see what we think might provide the best reward to risk.
Investment, you know what? I think at this point,
Okay, so everybody hear me okay? Great. All right, here was scenario number one. These are now. Let me put a caveat in there for all of these. Okay, the projections that you see here are all holding the position until Friday. Okay, not closing out tomorrow, but holding until Friday. And that is designated, which you can see, they'll all have this date on here of November 16th. Okay, now, the expected move is about $7. Okay, so we had that expected range of about 72 to 86. So if we look at here to roughly here, okay, this is scenario one. This strangle swap at a cost of hopefully 30 cents. It's the 72.587 strangle swap. Pretty darn good analysis here, reward to risk. And what I really like is even the worst case for us is one of two things. A, stock doesn't move at all, because then volatility absolutely gets hit. You get no movement, and you can see that. You know, that's reflected here in this loss area right here. Or you get an outsized move well beyond the expected range, which you can see down here. And if we were going that far to the upside, we'd see the same thing over here. But if this can really be done for 30 cents, this gives phenomenal reward to risk in either direction. Okay. Can we move on to the next one? Okay. The next one was only tweaking the strangle swap by a half a buck on the put side and $1 on the call side. So this one was the 72.86 strangle swap. Cost a little bit more. Ning, there will be a vol drop regardless. I promise you that. And in these evaluations, I took 50% out of the long volatility for next week. You know, typically on a calendar type of spread like this, we'll go 40%. I took 50% out to evaluate this. Okay? So this strangle swap, which probably costs a nickel more, okay, 35 cents, still evaluating it on Friday. These are the new strikes. So 72.86, those are obviously the high points of the, reward to risk. And then we get a break even on this down to about 68, and then well up to probably about 92. So looks really good as well, but compared to the first scenario, not as good from a reward to risk. Okay, then I have a third scenario here. Tweaking the put side again by a half of a dollar or one strike. Okay, so this one is 35 cents. You can see it's still evaluating it on Friday. Here's the new strikes. Break evens about the same range. High points right at the strikes. But again, the reward to risk not as good as the first one. Let me go back to the first one here, Don. Okay, right here. Now, the market probably changed since we looked at this, 45 minutes ago. So let's see if this 72.587 is still 30 cents really or not. Okay, let's take a look. So the 72.5, 87. Okay, now it's, the markets are different than they were earlier. This is probably now maybe 40 cents. But in addition, the stock is now 78.60. It was about a half a dollar higher when we looked earlier. So the expected move right now is still about $7. So, having the 72.5 strike, we probably want to go down to the 71.5 strike now. We can leave the 87 up there. Let's see what this does. Whoop. Hang on. Doesn't work because we need to change this strike here as well. There we go. Okay, now we're probably back at, let's say, 35 cents. And let's see what the reward to risk is. Okay, we'll do the same thing here. Move this to the 16th. And that's what we have. Let me actually put this in the Word doc for the comparison. Let me get a snapshot of this. Okay, got it. And this is the NTAP 71.5 87 strangle swap for 35 cents. Okay, so we've got that now right here. Okay, so given everything involved now, let's say we can't even get this for 35 anymore, let's say that's 30, this still is the best one. even though the expected move is really down to about 71 and a half, this still is the best setup in terms of the greatest reward to risk and balancing what Don just asked about, the break evens. Okay, so the break even on this one is about $68. Break even here, $68. Break even here, $68. Break even here, $68. So the original one that we did, even though the stock has moved a little bit, and even though the price is probably slightly higher right now, is the best one, the best opportunity out there. But again, remember, all of these comparisons are based off of looking at what this strangle swap might be worth on Friday. Not tomorrow, but on Friday, taking advantage of all of the premium decay from the short strikes this week. Okay, this is about as in-depth analysis as we can get on this, guys. And I think this is a must-do trade. Now, we don't want to do it at any price. We want to do it at our price. But unless you guys have any questions, I am going to put this out there. Anybody have any questions? Don Magnus, you still there?